Okay, so hello everyone, my name is Salim and welcome to the Mini Markets Live Breakdown Analysis. I just want to make sure first everyone hears me clearly and then we can go ahead with the breakdown analysis. Okay, so what we're going to be doing now, first of all, is looking on how the last weekly candle closed. Now, if some of you remember, on the analysis we have prepared on Thursday, preparing for Friday, we've mentioned how we were looking to keep an eye on how the weekly candle closed, because the thing with the weekly is the concern I was having here is we've had two rejection wicks on the left from these weekly candles, and then if we've had price rejecting this area and then this weekly candle closing bearish, still forming some sort of a rejection to the upside. Now we're looking on the monthly, what we're seeing is we've had this monthly resistance formed, the previous monthly resistance formed around 184.340. When it dropped down to the weekly, that's where the rejection lines up. But then the anticipation we've had is to see maybe a retracement, a retracement on a weekly, and that means we will see a daily resistance to be formed on Friday. But as we can see, the daily candle for Friday closed small bullish. I mean, to be honest, overall it looks like the daily has ranged really, because when you compare this daily candle, I mean that's roughly around 95 pip from the low to the high of the daily candle formed on Friday. When you compare it to these two daily candles, we can clearly see there is a reduce in volume. So there could be two reasons. Either price was just rejecting this area, or maybe we I mean, for example, okay, so looking at the weekly closed bullish, but then when you're looking at the daily closed small bullish. Now, one of the reasons is either price is going to form some sort of a range before the continuation to the upside, or maybe we're going to see some sort of a pullback on the high time frame. Now what we're going to do is we're going to go back to the monthly and just see how the monthly candles playing out so far. So now what do we see? The monthly candle is retracing. Reason why it's retracing is because obviously we have a monthly resistance formed back in December 2023. So this pullback, this push up on the current monthly candle could potentially be the monthly candle forming a top wick before breaking a low to continue bearish. Now when looking on a weekly time frame, the first weekly candle of 2024 has closed strong bullish. Now not only closing strong bullish, but also closing above this previous weekly support where price have held previously. Now, to be honest, looking at the weekly, it looks like we have a decent support that has been formed around 179.070. Price breaking and closing above this weekly support, which that was something like, this is some sort of like a good confirmation to see a potential retest of this weekly resistance. I mean, if we've had this weekly candle closing bullish but still closing below this weekly support, then we could say, okay, so maybe that was just a top wick for the monthly candle to form, and then we're going to start to see a pullback to continue bearish, knowing that the monthly candle for December closed bearish. But in this case, the weekly candle closed bullish and it closed above this weekly support. So now what we're going to do here is, the first thing we can see is the daily candle for Friday closed small bullish. Overall, the daily has range. So what would be good, like now knowing that the weekly closed bullish, now the target we have based on weekly time frame is to see a retest of this weekly resistance, knowing that we have strong candle closing bullish. Now, in order to see that good confirmation, it would be good to see the weekly forming at the bottom wick first, meaning that the daily will form a resistance to retrace, and that retracement can go as far as, let's say for example, this previous daily resistance on the left formed around 181.320, and then that will allow the new weekly candle to retrace from the bottom wick and lines up with this previous weekly support area. So that kind of makes sense, because we're not really just having like a random target. We have a specific target on where we will look, but like where we're looking to see the weekly candle to form the bottom wick. So that would be good to see. But again, this is just the new weekly candle open. This is just the market open. So we might see price breaking above the previous weekly high and then starts to reject and retrace. That would be good to see. Now we're looking at the daily. And now to start to break down the chart. So zooming in, and the first thing we can see is, and this is something I prefer to do myself, is put in the line to where the last daily candle has formed the bottom wick. So the low and the high of the day. And that's a small range, and that's roughly around 87 pip range, dropping down to the 4-hour time frame. And what we can see here, we can see there is some sort of a range forming on the 4-hour time frame, and you can clearly see how these 4-hour candles forming side by side, forming these rejections and closing just within this range. And then obviously the further down we drop down on the low time frame, the more range we will identify. And the best way to do it sometimes is when you're looking at the daily. When the daily is closing small bullish, that's the sign of price ranging within that session or within that daily candle, meaning that's the Asian session, the London session, and the New York session as well. So now let's have a look on the hourly time frame. Now on the hourly time frame, we have this range, and then we have this recent 1-hour support. Let's just adjust this here. Okay, so we have an hourly support around 183.710. We have this hourly resistance around 184.300. The reason why we're not really looking at this one is because this is a part of a range. When looking on the 30-minute time frame, again, we can clearly see we have this messy price action. Dropping down to the 50-minute time frame, this is just really messy as well. So now to identify the no trade zone, and because of how the daily candle closed on Friday, and how price has been forming on the 4-hour time frame, ideally, personally, I think this is a messy range. But let's see if we can identify anything. So let's say if you're looking for sells below 183.750, you do have this 4-hour range. Let's say a 4-hour support around 183.360, and that's roughly around 38 to 40 pip range. But then when you drop down to, let's just put a line here, but then when you drop down to the hourly time frame, this is a messy range. In my opinion, again, you have an hourly support, and then your target becomes much smaller. Now, in my opinion, what's best to do is to wait for price to break out of this 4-hour range, or even out of the daily candle that was forming on Friday, or that has formed on Friday. So in that case, what we do is look for potential buys above 184.300 or 310, and potential sells could be below 183.370. And this is the range where price have been consolidating, and technically that actually really makes sense, because below this 4-hour support we have this strong bullish candle on the 4-hour time frame. We have some clean traffic on the left to mirror once price break out of this range. For potential buys, again, we have clean traffic. Yes, we do have this messy daily range that was formed previously, but this is something that we're going to look into shortly, basically. So now to identify the no trade zone, we're just going to put this rectangle in here. Actually, let's just remove this a second, drop down to the hourly first and put it like this. And if you do have any questions while I'm doing this breakdown analysis, then please feel free to put a message on a live chat, and I'll be happy to answer your questions. So now to look for potential buys. Now, as mentioned, ideally, since the weekly closed bullish and closed above this previous weekly support, closed within these rejections, what would be good to see is to see this weekly candle retracing, forming the bottom wick, and then breaking the high, because once price breaks this high, there is a higher probability for price to at least tap into this weekly I'd say where this weekly candle started, around 186.110, and then eventually we have a target of this weekly resistance, but this is something to be adjusted within the monthly and the daily time frame as well. So Now, to look for potential buys, and let's have a look again on a monthly time frame. So monthly, we have a resistance that was formed back in December around 186,930, let's say 187 level. Dropping down to the weekly time frame, and what do we see? We have a weekly resistance at this level. Since we have a monthly resistance, we're going to ignore this one for now, because this is the strongest resistance on the time frames. Now dropping down to the daily time frame, and what do we see? We have this daily resistance around 186,130 or 186,100, and within that range we have these daily candles, and then we have this messy range, extremely messy on the daily time frame. But then we also have these two daily rejections on the left as well. So let's have a look on the 4-hour time frame. So actually, before going down to the 4-hour time frame, let's just put a line to where this daily support formed around 184,880. Zooming in and dropping down to the 4-hour time frame. Looking on the left, what do we see? We have this 4-hour candle, which could potentially be a way to push price bullish. And then we have a 4-hour support at this level, and then we have this previous 4-hour support on the left. But what we're doing here is we're paying attention to the strongest time frame, which is obviously in this case we have a daily support formed previously around this level. So our first target for buys could potentially be 184,880, targeting this previous daily support, or even to be more accurate, maybe like around 184,800, because we don't know whether price is going to reject this area. Because if price managed to break out of this range, and we could see this daily candle closing strong bearish, in order to see price trading above this range again, we have to see some sort of a confirmation based on the low time frame as well. And the second target the first target for buys is 184,830. The second target for buys, now let's have a look again on the weekly, the monthly. Let's just go back like this way. Now we have this monthly resistance again, but this is a big range. So let's have a look on a weekly time frame. We've identified this weekly open around 186,100, dropping down to the daily time frame. Now what we can see on the daily is we have this previous daily support formed around 185,530, dropping down to the 4-hour time frame. And let's have a look again on the left. What do we see? We see this 4-hour resistance, and then we also see this messy 4-hour range. So clearly we can see price have ranged, candles have printed side by side within this level. So we might see price struggling to reach this 4-hour resistance. Maybe price could tap this previous 4-hour support around 181, 185, 160. Price starts to retrace and then retest this 4-hour resistance. So I would say the second target for buys could potentially be 185,530, targeting this 4-hour resistance. So now to look for potential sells, and going back to the daily again. Again, our anticipation is to see a retracement, and I think that retracement could be possible, because what's important, like the most important thing is to understand how price is forming from the high time frame to the low time frame, talking about the monthly, the weekly, the daily. So if we have, for example, let's break this down. So if we have the monthly candles at the moment is bullish, hasn't broke below the previous monthly low, and we only had one weekly candle closing for January 2024. So we don't really have that much of a confirmation to see those sells. The only thing we can see is we had strong weekly candle closing bullish, forming support. So the anticipation is to see that continuation to the downside. So now for sells, we might have small targets again, and the reason why is because we don't know how much the new weekly candle will retrace to form the bottom wick before the continuation to the upside. Now the only issue we could face here is how this daily candle closed on Friday. So if this daily candle ranged overall on Friday on the daily time frame, on the daily candle and the 4-hour range here, now the question is, are we going to see that continuation going straight away, or are we going to see a pullback? Let's say, for example, the best case scenario would be to see a daily resistance to be formed at this level, or maybe let's say the daily candle breaking above this high, forming a rejection during the Asian session, retracing, and then Monday daily candle closing bearish, forming daily resistance, and then that will allow price to retrace and retest one of these areas on a daily time frame, and that will allow the new weekly candle to form a bottom wick. So now we could either see that bottom wick to be formed around where this daily rejection formed around 182.220, or maybe a retest of this previous daily resistance around 181.320. Because then once price break above this high, knowing we have a decent bottom wick that has been formed on a weekly time frame, on a weekly candle, and then the continuation to the upside becomes much clearer, knowing that we've price have already formed the bottom wick. So now to look for targets. Now the first thing we can see is we have this strong daily candle, a strong bullish candle closing bullish. But on the left, what do we see? We have this previous daily rejection formed on the 27th of December 2023, and that is a decent range. That's roughly around 120 pip range. So now dropping down to the 4-hour time frame, and what do we see? We have a 4-hour resistance at this level. Dropping down to the hourly time frame, now what we can see here is we have this hourly support, and this is something we can't just ignore, simply because if we have this big no trade zone, that doesn't mean we cannot pay attention to these small hourly supports or 30-minute support. The weekly still has literally just opened, so we still have to pay attention to those time frames. So now looking at the 30-minute time frame, what do we see? We have this 30-minute support, and this is clearly a range on the 30-minute time frame. But let's have a look on the 15-minute time frame. So on the 15-minute time frame, what do we see? We have this 15-minute support formed around 182.830. Now, in my opinion, I think this could be a decent target for sells. For the first target for sells, I'd say the first target for sells could potentially be 182.820, 830, targeting the 15-minute support formed at this level. And the second target for sells, now let's have a look again on the daily. Now what do we see? We have again this daily rejection dropping down to the 4-hour time frame that lines up with this 4-hour resistance area, dropping down to the hourly time frame, and that also lines up with this previous hourly resistance formed on the left as well, dropping down to the 30-minute time frame as well. And what do we see? Still clean traffic on the left, but we do have again this hourly previous 30-minute previous resistance as well. So again, a quick reminder that we are expecting a pullback on the weekly to form a bottom wick before the continuation to the upside, but still we have no confirmation for that pullback, knowing that the weekly closed strong bullish, and also knowing that the weekly has just started, so we don't really know whether we're going to see that pullback. And that's why I'd say usually at the market open on Sunday, the best thing to do is to take it really easy. The best thing you want to do is to allow the Asian session to form a new range for the new weekly candle before looking for like anything that's like a bigger target. And the way the daily candle closed on Friday, that's something that tells you to be careful on your targets, because if the daily closed weak bullish, if the daily ranged on Friday, then that means Monday could possibly range. You never know. There is no confirmation to see that continuation to the upside. And then so you could say, okay, so still, but the daily closed bullish. But then the next question is, you have a new weekly candle opening, so that weekly candle has to set up first, and that's why we're anticipating that pullback. So I would say the second target for sells could potentially be 182.200, I'd say, targeting this daily previous rejection that was formed on the 27th of December 2023, which also lines up with this previous 4-hour resistance area, knowing we have this clean candle on the 4-hour time frame. So this is how you can break down the analysis. So if you do have any questions regarding the GJ analysis, I would much rather have questions now before we move into the next step. But yeah, having questions would be really good. Okay, so the question that we have is, I'm assuming it is saying that is the entry gonna be around pre-London or London Open. Now, the thing is, it's really hard to say, because usually when the new weekly candle starts, the best thing to do is to wait for that range to form first. Usually the range happen within the Asian session, and then you start to see some sort of like movements or directions for where the daily candle's gonna head during the pre-London or the London Open. But for now, I would say you literally could see anything. Like, there is a possibility to see this daily candle breaking above the Friday daily high, meaning breaking above the last weekly candle high, and then maybe price starts to range, retrace, form a rejection, respecting this previous daily support area where price have consolidated previously. So anything that can happen. So in my opinion, the Asian session, usually at the market open, it can be very inconsistent on the confirmations. Do we have any other questions? Okay, so the question we have from Nemat is, for GJ, could a break and close above 184.310 on the 5-minute time frame chart could be a confirmation to buy and target the first to be at 1? Okay. Okay, so yeah, like that could be a target, but let's have a look on what you can see on the 5-minute time frame. Now, on the 30-minute time frame, let's have a look on the left if we can identify anything or any sort of like a resistance. So on the 30-minute time frame, to be honest, we do have clean traffic. Yes, we do have this 30-minute resistance, but that shouldn't be a problem. But the only thing is, I would much rather wait for the hourly time frame, for the hourly candle to close above this level, because if the hourly candle closing above here, then that's a strong confirmation. That doesn't mean it might not work on 30-minute time frame, but this is just something that I would rather wait, because if you're waiting, for example, if you're waiting for a 30-minute candle, let's say the first half of the 30-minute candle closing bullish, and let's say that first half is closing something around 184.390. You don't know whether the second half is going to continue bullish or if it's going to form a resistance and retrace, because that what would look like on the hourly is it would look like a rejection forming to the upside. So it all depends on when are you looking for these confirmations. You know, if it's let's say during Wednesday, Thursday, Friday, and you've had already some sort of price action forming for the new week, for the weekly candle, then you could have that as a confirmation. But that doesn't mean it won't work, but it's just, for me personally, I would much rather wait for the hourly candle to close above this range, because this is a 4-hour range. This is a messy range on the 4-hour time frame. Do we have any other questions? And yeah, to be honest, like the question that you've asked, like if, yeah, you're welcome anytime, Nimat. The question that you've asked, if you've had that confirmation around the, let's say, London session where you've seen a lot of volume, then you could take that based on the 30-minute time frame, because let's say if you break it down and you look at the 30-minute candles, let's say the last 2 30-minute candles or the last 3 30-minute candles printing strong bullish. For example, you know how this 30-minute candle printed in here, this was a decent 30-minute candle, because this candle managed to close what multiple 30-minute candles or hourly candles failed to do. So for example, you have this hourly candle closing above 1, 2, 3, 4, 5, 6 hourly candles. So that is an indication of a volume coming into the market. Now your confirmation, the reason why price didn't continue that way is because this hourly candle didn't break above the high. And that's why it's important to always wait for confirmations, wait for that break above that high. But yeah, this is how I look at it. But for example, let's say if you had price retracing, forming a support, and then that support is formed on 30-minute time frame, and then you have strong 30-minute support formed at this level, the next 30-minute candle closing around this way, and then the following one break above this level, and you could take that confirmation based on price failing to close below this 4-hour support, forming a rejection on the 4-hour time frame, which that means that is a 30-minute support on a lower time frame to continue bullish. And then obviously your confirmation to see that to confluence your idea of buys is, okay, so weekly is bullish, the last weekly candle closed bullish, the weekly so far is pushing bullish, the daily so far is bullish, the monthly is bullish. So this is how we look at these confirmation to give you the confidence to take those trades. Do we have any other questions? Okay, so you're welcome, Ziad, you're welcome. So now looking on gold actually, and very interesting how gold played out on Friday. Now let's have a look first on the weekly. Now the weekly candle for gold, starting to break down gold now. The weekly closed bearish, forming weekly resistance around 2063 level, and the way the weekly candle closed, it looks like it rejected both ways, like the upside and the downside. Like the way I see it, sometimes is I measure the rejection to the downside, that's roughly around 215 pips. To the upside, that's roughly around 160 pips. But then the body of the candle, that's 180 pip range. Now we're looking at the monthly it's still bearish. And looking at the daily candle for Friday closed weak bullish, or just like a doji bullish candle, rejecting the upside and the downside, and that was purely based on how the market, based on how the news data that came out for NFP and how it was revised. So now to break down the chart on on gold, sorry. So now looking at the weekly. So since the weekly has formed a resistance around 2063, respected that previous weekly resistance formed back on the 4th of December 2023, around 2073. Now, is this going to be a good confirmation to see that retest of this weekly support, or is this not enough? Now, based on the weekly, the way I see it is, if the new weekly candle respect this weekly resistance, respect the 2063 area, there is a higher probability for price to, let's say, form a top wick, retest this weekly resistance, and then fill this previous weekly low, and then retest the weekly support formed on the 10th of December 2023. Now let's just put a line to where this weekly resistance formed and look at the daily. Now this is exactly where the daily resistance daily rejected around the daily candle that was formed on Friday, rejected this level, dropping down to the fallout time frame. Yeah, clearly we can see. Okay, so let's have a look. Okay, so now to break down the chart, so we're gonna put a line to where the daily high that was formed on Friday, and put in line to where the daily low that was formed on Friday as well. Now dropping down to the fallout time frame, and what do we see here is clearly we can see there is a messy range on the fallout time frame, and we've had this volatile 4-hour candle during the New York session, and then clearly we can see price retracing back to where the daily candle started, as we can see, and then dropping volume again. So now what we're gonna do is we're gonna identify the no trade zone. The first thing we're going to do is identify the most recent 4-hour support formed around 300, excuse me, and the most recent 4-hour resistance formed around 800. Now dropping down to the hourly time frame. Now we have an hourly support around 700, and we have also this hourly resistance around 100. Dropping down to the 30-minute time frame, again we have the same level of support and resistance. When dropping down to the 50-minute time frame, we have almost the same levels as well. So now to identify the no trade zone. Now based on the hourly time frame, I would say for buys this is a good target. For sells, this is something that we need to adjust. Now let's go back again to the 4-hour. Now if this is an hourly support, and then we have another hourly range within this level around 2038, and then also we have a 4-hour support around 200, ideally is to adjust this level to 800, and see if that lines up with the hourly time frame. Yes, that does. And looking at the 30-minute time frame, we can push it slightly lower to 500. So it's safe to say that potential sells could be below 500, breaking out of this hourly range and hourly consolidation zone. And for potential buys, now we do have this 4-hour resistance, and we also have this previous 4-hour resistance on the left, so this becomes like a fake out on the 4-hour time frame. But let's have a look on the hourly. So on the hourly time frame, we have an hourly resistance around 100 as mentioned. Dropping down to the 30-minute time frame, a 30-minute rejection after the 30-minute resistance has been formed, and then we're looking on the 15-minute time frame. We have this 15-minute resistance around 300. Now since we have a 4-hour resistance previously formed, we have an hourly and the 30-minute time frame lining up with the resistance. We could look for potential buys above 2048 and potential sells below 2037, and this is going to be the no trade zone. If you do have any questions regarding this no trade zone, then just please let me know and I'm happy to break it down. So now this is going to be the no trade zone, and now to look for targets. Now as mentioned, the anticipation here is to see a weekly resistance to be respected, and to see a wick fill of the previous weekly low and a retest of the weekly support formed on the 10th of December 2023. Now to look for potential buys. Now here's the thing, so the monthly is bearish, the weekly closed bearish. What we're going to do here is we're going to look for potential buys first. Let's have a look. Okay, so the first thing we can see is we have a weekly resistance formed around 2072 or 2073. Dropping down to the daily time frame. Now the daily, we have this daily rejection formed on the 2nd of January 2024, and we have this daily resistance above this level. But let's have a look on what's going on within this daily rejection. Dropping down to the 4-hour time frame, we have a 4-hour resistance, but again we need to look at this daily rejection formed on Friday first. So dropping down to the 4-hour time frame, and what we can see here is a 4-hour resistance formed around 800. Dropping down to the hourly time frame, we have a same level of resistance. Looking at the 30-minute time frame, we have a higher 30-minute resistance, but for now we're going to ignore this one as the first target for buys. Yes, I would say the first target for buys could potentially be 20.54.800, targeting the 4-hour resistance formed on Friday. And the second target for buys, now here's the thing, let's go back again on weekly. We have a weekly resistance formed around 2062. Let's just take this one off. Looking at the daily, we have this daily rejection formed on Friday, dropping down to the 4-hour time frame. Now, before this 4-hour rejection or the weekly resistance formed last week, what we can see on the left here when we zoom in is we have this previous 4-hour support formed around 20.59.100. Now, since price rejected this area, that means price on the 4-hour time frame respected this 4-hour range, and that's why we've seen the 4-hour candle closing bullish below this 4-hour previous support, forming a rejection to the upside, and then the following one formed resistance, pulling back to where the daily have started on Friday. Now let's have a look on the hourly time frame, and if we can identify anything. Zooming in, what do we see? Nothing again apart from a rejection. Looking at the 30-minute time frame, now we can clearly see the previous 4-hour support is lining up with the 30-minute recent resistance formed around 20.59.800, let's say 20.60. Looking at the 15-minute time frame, this is where price formed small consolidation on the 15-minute time frame. So I would say the second target for sells could potentially be, for buys, could potentially be 2060, targeting this previous 4-hour support, which also lines up with the 30-minute resistance formed on Friday. So do we have any questions regarding the buys? If you do have any questions, just make sure to put them on the live chat and I'll be happy to answer them. And now to go straight into sells and going back to the daily. Now we've had targets for buys. We've had our anticipation based on the weekly as well, because the weekly formed the resistance. The anticipation is to see a weekly wick fill and a retest of this weekly support. Now you can clearly see how our targets seems to be a lot more smaller on buys, simply because we've had a weekly resistance formed and the daily formed the rejection to the upside as well. So now to start looking for sells. Now the first thing we can identify here is the weekly low that was formed on Friday or last week around 20.24.400. Drop it down to the daily, that was the daily rejection formed on Friday. And then drop it down to, yes, so the daily. So what we can see here is we have this previous daily support formed around 20.31.900. Drop it down to the 4-hour time frame. We have a 4-hour support, and this is actually really interesting because this 4-hour support lines up with this previous 4-hour support on the left, also lines up with the daily support formed previously on the 21st of December 2023. Now let's have a look on the hourly time frame. Again, that lines up with the hourly, but still we have this rejection, and this is really not a concern really, because this was during the news. Looking at the 30-minute time frame, now looking on the 30-minute, again we have a same level of support, so you can clearly see how everything is lined up, and this becomes a strong confirmation for a potential target for sells. Now looking on the 15-minute time frame, and this doesn't really concern at all, because obviously that's where we've had a lot of volume going on. So I would say the first target for sells could potentially be 2032, just to be more precise, around 20.32.500, targeting this 4-hour support, which also lines up with the daily support from previously, and that would allow for price to partially fill the previous weekly low. The second target for sells, now again we're going to put a line to where the previous weekly low has been formed around 20.24.400, which is the rejection that was formed on Friday on the daily time frame, on the daily candle. Dropping down to the 4-hour time frame, and what do we see? This is, so to be honest, this is rejection based on all time frames, and even on the 30-minute time frame, the 15-minute time frame, this is just a rejection. But the one thing that we need to pay attention to is what has been happening previously on the left, ignoring this rejection. Looking on the 4-hour time frame, and what do we see? We have this 4-hour range, but the first thing we can notice here is we have this recent previous 4-hour resistance around 20.27.700. In that case, what we're going to do is adjust it to this previous 4-hour resistance. Now let's have a look on the hourly time frame. Zooming in and looking on the left, and what do we see? We have this previous hourly resistance. Now again, we do have this hourly support, but sometimes when there is, okay, so we're just going to go step by step. Okay, so we have this hourly resistance. We can clearly see we have this hourly support, 2029. Reason why I'm not paying much attention to this hourly support is because this is a small range. The reason again why I'm paying more attention to this side is we have this previous 4-hour resistance, we have this 4-hour rejection, and also we have price rejecting the 2027 level as well. Let's have a look on the 30-minute time frame. Again, on the 30-minute time frame, a 30-minute rejection. And then on the most recent price action, nothing really apart from that rejection that was seen on Friday last week. Now let's have a look again on here. I would say decent target is to have the second target for sales at 2027,700, targeting this previous 4-hour support, 4-hour resistance. So now if you do have any questions regarding these analysis, then please, I'd love to see some of your questions. It'll be good to discuss to why I've had these targets, and also you might notice sometimes the targets that I have are much smaller than the no trade zone, and that's completely normal. This is something that you need to adapt. Just because of the no trades being bigger doesn't mean that your targets has to be bigger as well. Now you have to pay attention to how candles are printing, how candles are closing, and you have to pay attention to when you're trading, when you're doing these analyses, and how the daily is forming, when are you doing these analyses. So we're doing them at the beginning of the week. We have no recent data for the new weekly candle. We literally have nothing at all apart from just like 1-hour candle. So it's really hard to judge on what the price is going to do. The only thing we can do is look at how overall the previous weekly candle closed, how the daily candle closed on Friday, and then start to map out your targets based on the those high time frames. Let's say the monthly. So for example, personally I'm leaning more into sells because it'd be good to see some sort of a pullback to retest this previous monthly resistance formed around 1987 level, because then price then could form a decent support on a weekly before that continuation to the upside. Now again, the other thing that we have to pay attention to is gold has been extremely bullish, so we haven't really seen any decent retracement, or let's say retracement on a weekly. We've only seen weekly support formed, a new high, formed a resistance, a pullback, a retest of this previous weekly resistance, and a continuation to the upside. And now it looks like price is forming some sort of a new range on a bigger let's say range on the weekly time frame. Yes, so if you do have any questions, just let us know. Okay, so we have a question here. So for example, we risk 1%. How much I have to take in the first take profit, in the second one, just to know? I mean, like, secure when you think you're comfortable to secure. I mean, you don't necessarily need to hold all the way to the first target. If you feel like price is going to start to retrace or something, it's best to secure whenever you think you're comfortable to secure. I don't really look at like, I do look at how price has formed previously and how my targets are playing. I also pay attention to how this recent price action is forming as well. So in terms of like securing position, it all depends on yourself. Like as a trader, are you wanting to secure early? You want to take a big chunk out of your profit and then just leave runners? It all really depends on how you trade, basically. So the question we have is, for gold, though Thursday is still far into the week, don't you think the CPI reports could affect the bias on gold? Just thinking fundamentals could play a key role. Yes, I mean, yes, like I would say fundamentals and technicals play, together. But it's too early to say because it all depends on how the weekly so far plays out. I would personally wait at least to maybe like Tuesday, like at least 2 daily candles forming, because then at least you have some sort of like partial of the weekly candle and see how volume's playing, because you could anticipate now the daily candle for Monday and Tuesday could literally just be ranging within this 4-hour range, for example, and you start to anticipate things that haven't really been formed. I would wait at least to Tuesday and then see how candles are forming. I would say personally, but again, this is how I look at it. Like yes, I do anticipate on a larger scale, like on high target frames. I would say I'm looking at those weekly resistance, this weekly resistance around 2073, and I'm looking at this weekly support. These are the kind of targets I'm looking at. But for me, it's too early to say anything, because so far what I can see is price haven't really given me anything as a confirmation, because the daily candle for the last decent daily candle we've had was Wednesday last week, and then the Thursday daily candle closed week bullish, and then the Friday closed doji bullish with rejection to the upside and the downside. The 4-hour is ranging, so it's really hard to say, I would say. And you're welcome, Ziad, you're welcome. But yeah, it is important to pay attention to, like, yes, have it on the back of your mind. Like, just remember the CPI that you have upcoming and stuff. But like, just take it steady with the week. Just wait for those confirmations, I would say. And you're welcome. And to be honest, like when price is ranging like this, it is actually really good, because when price is ranging the way it is, especially on a 4-hour time frame, the more it range, the more confident I have on executing on trades, for example, because I know if price is ranging within this level, I know I'm not going to touch it whatsoever. Like, whatever happens, this is a range where I'm not going to trade, because if these candles are not telling you anything, then I don't know what you'll be looking for. These candles ranging within this level, they're clearly telling you something. I mean, the first thing I can see on the daily is price maybe is reacting to these levels because of this previous daily support or previous daily range that was formed previously. I mean, even on a weekly, and I actually remember this weekly candle, where is it? It's this one here that was formed on the 5th of November 2023. This was a really small weekly candle closing week bullish, and through the whole week, Monday, Tuesday, Wednesday, Thursday, Friday, formed range. So maybe the reason why price is struggling to break above is because of price approaching a previous area where price consolidated on the daily time frame. And those confirmations, you can clearly see them, because you can see how this daily candle tapped into this, almost this previous daily support or daily range, retraced, formed the resistance the following candle, the following daily candle formed the resistance, pulled back, and then again another retest of the same range, the same target, like the same range where price rejected previously within this daily candle. The exact same thing that we've seen here, a daily resistance formed and a pullback. And now what do we see again? This daily candle tapped into this range again, closed bullish, and then the Friday daily candle failing to continue bullish, and instead the daily candle ranged on Friday. So when you look on a weekly, the weekly also makes sense, because there we've had these 2 weekly rejections, and we've had this previous monthly resistance formed back on the in September 2023. So this is how I look at like targets, and maybe this would give you, so since price rejected this area multiple times, something's going on. So 4-hour time frame is ranging. So why price is ranging? And the answer is within this daily range, because I would say once price break and close on the daily, preferably the daily, once price break and close above this daily range, now there is a probability for price to continue bullish, knowing price broke above this previous daily range. So this is how I look for targets basically. Do we have any other questions regarding the analysis? And again, as mentioned last week, the analysis are going to be 3 days a week. So there will be the analysis preparing for Monday, Wednesday and Friday. We are doing them at the start of the daily candle, which is obviously during the Asian session. The reason why we're doing it that way is because it's important to prepare ahead. You know, like the last thing you want is a daily candle started, it has already formed the range, and then all of a sudden you want to start your analysis based on, let's say, the London session or the New York session. That doesn't mean that you're not doing a correct analysis, but your anticipation can become much lower than when you're doing them at the start of the daily candle. For example, I've been doing them for quite some times, for about 3 years now, and every day at 10 p.m. UK time, once the daily candles start close, then I start doing my analysis, because what I do is I keep the exact same lineups, I don't delete anything, and then once the daily candle close, then I will go and review how these targets played out. Basically, has price tapped into these targets? And then the question is, why did the price didn't tap the target? Clearly it'll tell you why it didn't basically tap into a certain target, because maybe price ranged, or maybe price formed a fake out, or maybe there is news coming up, or maybe just the price reacting to a rejection area on high time frame, and just in general, you know. But yeah, so looking at like doing these analyses at the Asian session, it allows us to build that confidence on, you know, getting more accurately with the analysis, I would say. Thank you Ibrahim, I appreciate that. Do we have any other questions? I really like getting questions, because it keeps the stream going, it keeps me active. Questions are really important, I would say. Oh yeah, yes. So which days of the week again? So yeah, basically, as today, obviously at the market open, the new weekly candle starting, we do them on Sunday. Technically it'll be Monday for some people, but that's because we're starting, this is when we're starting the daily candle. So they will be preparing for Monday, they will be preparing for Wednesday, and we'll be preparing for Friday. So the analysis for UK time would be 11 p.m. on Sunday, 11 p.m. for Tuesday, and 11 p.m. for Thursday. Because then at least we're doing analysis from the start of the daily candle basically. And you're welcome. I appreciate you coming to the live stream. I really like having interaction on the live stream because it allows me to keep going basically, you know. Thank you, Abraham. And you know, something I was actually paying attention to on a high time frame on a monthly is why price formed monthly resistance around 186 or 187. Why price didn't continue bullish? In my opinion, looking on the left, it all made sense because obviously we've had this monthly rejection. Price being extremely bullish on a high time frame, you can clearly see. So I would say a correction is needed. It'd be good to see correction, I would say. So we have a question, can you brother share with us sometimes your execution just to learn how to do the same for next time? Yeah, so like for example, the last time I've traded, it was the New York session, it was the gold news. I've had the sell stops and I've had some buys as well. So the sell stop, it was the news spike. The reason why I did take the sells, and I'll actually mention this, is, let's have a look on the 5-minute time frame, is this is the candle before the news. And then when this candle was closing, or like at the time was printing bearish, I actually entered the trade, I'd say probably about 5 seconds before the 30-minute candle closed on Friday, before the NFP. And the way this candle closed, like it was printing bearish at the time and was forming this small rejection to the upside, I took a sell, and then I think I've held till about 2027, and then I closed straight away. So that was literally within 16 seconds. Profit went roughly around almost 100 pip range. And then I would say good buy confirmation would be here. Since this 30-minute candle formed this rejection and closed bullish, this is your confirmation. Despite knowing we've had this messy range on the left, this would have been a perfect opportunity to take buys on gold, because we've had this candle breaking above these levels, forming a huge rejection to the downside, retracing, closing bullish, and then this following candle, as it breaks above this high, that would have been a perfect opportunity to take buys, knowing price formed a rejection to the downside. Yeah, so any particular reason you decide to trade only GJ and gold, maybe we can learn and follow suits. To be honest, I have the exact same reason to why, the exact same reason as Raja. Like GJ has got a lot of volume. I live in the UK, so it makes sense for me to trade GJ. The reason why I trade gold as well is because gold has got a lot of volume as well, so there is a lot more opportunities. For example, if you're looking at to trade Euro GBP or EU or something, there isn't much opportunities, and even if you're waiting for an opportunity, then your return is not going to be as big because the moves are much smaller. So when you measure, the reason why I did choose GJ and gold is because when you measure the daily candle on these pairs, they move a lot more than other pairs. So what you want to do is you want to pick a pair that has got a lot of volume, and the pair that will allow you to have a lot more return within, for example, let's say within 1 hourly candle. Let's have a look. For example, let's say within 1 hourly candle, this hourly candle moved around 62 pips. Within this 62 pips, you could clearly take 20 pip move, and you could capitalize on that. But anyway, if you look on, for example, Euro USD, the daily not as big as how the daily candle is on GJ. So you wanna trade the pair that gives you a lot more return, basically. And that's how I did choose it. And again, obviously Raja, when he used to do the live streams, or when he was doing the live streams back in 2020, when I used to watch his live streams, it made sense to follow GJ, and it made sense to look at gold as well, I would say. Yeah, you're welcome, Nimat. Do we have any other questions regarding the charts? Can you give us signals on the 5-minute chart? Is that the question? Nah. Yeah. You'll be doing nothing. Basically, on the 5-minute time frame, you'll be taking losses. Maybe during the London session, if there was a lot of volume, then maybe you could capitalize on small, like fractional returns of taking trades within a lower time frame. But for now, there's not a chance, because the way price is forming, for example, let's say for GJ, 5-minute candle, the last 5-minute candle measured around 66 pip move. There's not much you can do really. I wouldn't recommend trading the 5-minute, especially at the Asian session, unless if unexpectedly you see a huge spike on gold and you can't take it based on the hourly or the 30-minute time frame. You can clearly take it on the 5-minute or even the 1-minute time frame. It all depends on where there is volume, but I wouldn't recommend doing it now. So we have Michael saying gold buys if 30-minute candle closes above 2045. Now see, here's the thing. It doesn't mean it's not reachable. And literally any targets you can set within these ranges, they're achievable. But the question is, how quick can you get these targets? Like, I wouldn't recommend looking for trades within this level, because you have this previous 4-hour resistance. You have a 4-hour forming a fake out to the upside, and then you have an hourly resistance. You have a 30-minute resistance. So you stop loss, for example, let's say a 30-minute candle closing above 2045, then your stop loss roughly is going to be 12 pip range or 17 pip range. And then you target what? Are you targeting this 30-minute resistance, 25 pip range? Do you think 25 pip range is a decent target to target within a range? I wouldn't say so, no. If you would ever want to trade the range, then maybe what you could do is, this is how I look at it sometimes, is let's say we have this is as a range. If price tap into this level around 2048 and then a candle ends up closing with the rejection to the upside, then the candle pulls back, for example, form a support on a 30-minute time frame or a 15-minute time frame. Once that support is formed, if I see a good 15-minute candle closing strong bullish, then I'm going to have the anticipation of seeing price continuing bullish, knowing that you have, for example, some sort of a time frame being on your direction. For example, let's have a look on GJ. If that happened on GJ, now this is how you're going to look to give yourself that confidence on taking that trade, is looking at the weekly. For example, the weekly closed in your favor, so you're looking for buys, okay? So you're looking for buys, you waited for that price to retest this area, form a support on a 30-minute time frame, close decent strong 30-minute candle. Now this is how you're going to look for those. You're anticipating to see that continuation to the upside, and your confirmations are the previous weekly candle closed bullish, the monthly so far is bullish, the daily is bullish, meaning that the daily has formed as let's say a bottom wick, and then the 4-hour candle also forming a rejection, respecting this 4-hour support to continue bullish. So this is how you're going to have these confirmations, like to influence yourself to take these trades. But again, this is not something that I would recommend. It's just something that I would potentially advise somebody to do if they wanted to change the no trade zone or the no trade range. Do we have any more questions? And again, the other thing that you could do, Michael, is you could always, if it's something that you think it's achievable, like is achievable for you, like for example, you were looking for buys above 2045, maybe you're targeting this 30-minute resistance or hourly resistance, just paper trade it, or just open a small lot and just see how it goes. But whatever you do, if it doesn't go to plan, then just manage your risk and don't risk it. I would say, honestly, don't risk it. Just give yourself like a good confirmation, because then you're not only holding on your risk, you can even risk, like you can increase your risk knowing that you've saved so much money of not trading this range and waiting for those strong confirmations for price to break out of this range. Your risk can become higher knowing that price have already done what it needed to do within this range, and your confidence becomes much stronger as well. So Tony, appreciate your time and analysis today. Thank you, Tony. I really appreciate your comment. I really do appreciate it. I genuinely mean it. Thank you so much. Thank you. Yes, 100%, Nimat. I think it is better to be patient and avoid the no trade zone, 100%. And you know, one of the things that I used to receive a lot is sometimes when I do the analysis, for example, I have 150 pip range as a no trade zone, and honestly, I struggled. Like at one point when I was doing the analysis, I struggled to post the analysis having 150 pip range as a no trade zone and having, let's say, targets as like 40 or 50 pip range. Trust me, this was difficult, I'm not gonna lie. But I had to face the reality, because the reality is, if price is creating this huge mass, then there is no reason to give those analysis to people just to make it look like, you know, an attractive analysis. For example, yes, the no trade zone is small, looks good, the buys are more appealing. Nah, like it's not worth it. I'd rather just be honest and face the consequences of getting questions to why you have a no trade zone too much larger than the targets. But then half of the time, this is the most sensible thing to do, you know. And usually when I do it around 150 pip range, we're talking about gold. Usually when there is huge ranges on the 4-hour time frame. For example, this is more than 110 pip range, more than 100 pip range as a no trade zone. And then our targets we have 67, and then we have 51. But then again, the no trade zone is too small. Again, the reason why is look how the daily closed on Friday. Look how the 4 hour has been forming prior to that. So everything has to really line up, you know. And then I started posting them as I thought the analysis should be, and sometimes I get questions and I answer them and I just give the clear explanation. And the one thing I would say, if you're not confident with anything, like, you don't have to follow exactly everything I do. If it's something that catches your eyes, and if you like you could do better than the analysis provided to you, then take notes and take trades, you know, take paper trades or take small trades. Just the reason why I would advise, if you have like a strong valid reason to why you want to take a certain trade, for example, a strong valid reason to why you want to trade this no trade zone, and that's completely fine. You have every right to take it on trade. But what to do is maybe take a really small lot size, not because you're wasting money, but you're having those trade on your record, because you can always look back. Because when you are reviewing your trades, then you can see, yes, I've had this small return, but I still traded the no trade zone. So then your confidence starts to gain. Where if you just do paper trade it, you're just gonna forget it. So yes, that's what I would say. So the question is, without day trading, do you brother do swing for another wallet maybe? To be honest, no. Like I don't hold trades for long at all. I'm in and out. I'm literally in and out. I've never held any trade above more than maybe 4 hours. I don't think. Most of my trades, literally, we're talking like, for example, on Friday, the sells I've had just before the news, it was 16 seconds. I've opened the position at like 1:29 p.m. and 55 seconds UK time, and I closed around 16 seconds later. So it was just like in and out. And again, there's a lot of volatility, and holding it, there's no point. And it was a good thing that I didn't hold it, because obviously price formed rejection to the downside. And also that was really risky, because I didn't do sell stop. I actually executed manually, and I'm just gonna go back to it again. The way I did take that sell was this 30-minute candle. That was literally the candle before the news. This is the news candle. The reason why I took that sell is because this 30-minute candle was already forming a rejection to the upside, and that was like 15 pip range. Yes, that was like a small rejection, but just because of how the last few seconds of the 30-minute candle, the way it was printing, it was leaning more to the downside rather than the upside. So that's why I took the sell, basically. Again, that's extremely risky. I wouldn't recommend anyone to do it unless if you are willing to take the risks, or if you want to practice, then maybe use a small lot size. But yeah. You know, in order to do swing trading, like, you need to have a lot of patience. Like, you need to be a lot more calm, because the thing is with swing trading, like, you know, 1 minute you're £5,000-6,000 in profit. The next minute that 6,000 goes from 6,000 to 3,000, and that doesn't mean you're gonna get subbed out. That means just maybe if you're holding a trade for the week, for 1 week, for example, that daily candle, just because it reaches, let's say your profit reaches into £6,000, that candle needs to retrace, just like how we see daily candles forming here, for example. Let's have a look. Okay, so like here, let's say within this level you're 6,000 in profit, here 6,000 in profit, and then it starts to retrace your 4,500, and then you think, oh 1,000, and then it goes back into profit, and then you kind of lose yourself a little bit. It all depends on how confident. If you want to swing trade, then maybe open a small position and have a valid, like, really assess your analysis, have a valid reason to why you want to take either a sell or a buy. It has to make sense. You have to write it down, because you can clearly, like you can easily switch your buys when you're looking at the high time frame, or when you're looking at let's say, you know, swing trading. You could easily switch buys, you know, if like, let's say if you are on a position for buys, and all of a sudden price starts to form a rejection on the hourly, you start to feel, what's going on? Am I gonna take a loss? And then you close that position and you go into sells, and it's just, it could be simply that hourly rejection, could be the daily retracing to form that top wick to still close bullish, to then the following daily candle to fill that rejection. So the rejection on the hourly becomes the daily wick fill for the new daily candle, if that makes sense. So if you was gonna try to do swing trading, maybe on a note, like on a piece of paper, write your confirmations, open a small position, and just monitor it. Have your risk management in place, write it down just so you follow it, because again, the longer you are in the trade, there is a higher probability for you not to follow your trade, let's say your trade management, like. So that's what I would say. That's what I would do if I was gonna swing trade. Where when you're scalping, you know, you're in and out, even if you're gonna take that pain. If you're on, let's say on a drawdown, maybe that drawdown is only based on that fair minute candle, you know, it's not gonna be as painful. Or if you have in your drawdown based on a daily support or a 4-hour support or whatever. So it all depends on how you take those drawdowns, basically. Do we have any other questions? Yeah, that's good. That's good to know. I understand. I know I prefer to trade daily, but I have another question. Yes, go ahead. So we're gonna be here for another 15 minutes, and then we'll wrap the live stream. If you do have any questions, guys, just make sure to put them on the live chat now, and I'll be happy to answer them for you. Can I trade only one setup? So for me, it's gonna be easy because I'm a beginner. Yes, like that's no problem in that at all, you know, because that one setup that you have can give you a massive return, you know. It's better to start with just one thing and then start to, you know, scale your I'd say if one setup that gives you a good return, just stick with it. It doesn't matter if it looks stupid to some people. It doesn't matter if it's not something that you're happy with. But if it's giving you a return, and that's what you're looking for. You know, you're not looking to trade and take losses. You're looking to trade to make money, basically. Yeah, so we have Michael saying, see, now I would say there isn't really a gold buy, no wick at the top, and stop loss is too big. Yeah, like Michael, looking at it, honestly, is really not worth it. Like, the only way I would say you start to be alert or the way I do it is, for example, you know how this 30-minute candle closed strong bullish? This is when I'm going to start to get ready for a potential impulse entry for buys, because this 30-minute candle managed to close strong bullish rather than these candles we can see here on the left. Now you can clearly see this candle broke above the high, retraced from the rejection. On the 30-minute is a rejection, on the hourly is a rejection. That where you could potentially start to think, okay, so am I going to take a reversal? It all really, like, honestly, it's all down to you, but it's really not worth it. If you have, for example, let's say a 30-minute candle closing strong bullish, even though the 30-minute candle is not closing above 2048 100, if that candle's closing strong bullish, let's say closing around 2047 800 for example, now wait for the new 30-minute candle to open, allow it to form a bottom wick, and have a certain level to where you want that 30-minute candle to form a bottom wick. For example, in my opinion, if I had candle closing above here and I was impatient on waiting for price to close above this line, then what I'd do is anticipate on where price is going to retrace. For example, the kind of retrace I'd like to see is to see that wick to form around here and then flip bullish, because then that is going to become my stop loss. Because if price is retesting this area and pushing bullish, there is no reason to why price should retrace again to tap this area again. So we have so Vince, Discord channel, Salim, please, thank you for your time as always. Yeah, thank you, Vince. I really appreciate you tuning in. You've been, following the analysis for quite some time, and I really appreciate your loyalty to the channel. Discord, yeah, that's actually a really good idea. So I will get back to you regarding that as soon as possible. I just have to have a discussion with our team first. I can't just take decisions on my own, but this is something that we can do definitely, because when having a Discord channel, then it allows us to have genuine traders who really wants to let's say who really needs help with trading, and I'd be more than happy to answer questions and assist further with trade ideas, and I'll be able to see people's let's say markup analysis, and I'll be able to comment on them. This is something that's really good. So it's not something that we not planning to do, but I cannot talk about this right now. But as soon as I get any information, I will let you guys know. But this is something that's really good actually. Probably something like, let's say, the Asian session, London session, New York session, general chart will have analysis chart, we have different questions, random charts and whatever. But at least it allows you to ask questions, any concerns, and then that way any of these questions, when they get answered, then some of the members who might not want to interact with the chat as much, or maybe they're just shy to speak, maybe they will be able to benefit from these chats basically. Nima, so we've got many thanks, Salim, really appreciate your time and effort, always something new to learn and earn as well. So yes, I really appreciate your feedback, and I appreciate you coming every live stream. I like having that interaction. If you struggle with anything, with trading, if you have any questions regarding trading, if anybody who is with the mini markets, he's a current client member, and wants to have some help, I'm more than happy to offer a 15-minute free Zoom call one-to-one session where I can take you through different steps. If it all depends on what you need working on, this is something I can do. I just need to make sure that you are a client member. I'll give you a link to sign up, and there is a referral link on my on the description below. If you just sign up through that way, and then we will be able to assist you further. This is something that I would like to do as well. So yeah. So we will be wrapping the stream in about 7 minutes, so if 8 minutes roughly. So if you do have any questions, please let us know. Again, another live stream will be on Tuesday, preparing for Wednesday, so that will be let's say 11 p.m. on Tuesday UK time. So we have Ziad saying, for one setup sometimes I trade one time in a week or 2 times. The setup, I'll wait to see a range in New York open and see the break and close, then participate in a 30-minute candle. Wait to see range in New York open and see the break and close, then yeah, I mean, yeah. But the question is like how profitable you are with those setups. Like, are you just waiting for price to break out of the range? Have you got a reason to why you're taking these trades? Yeah, that's enough. As long as I would say, as long as your bias does line up with the all-time frames. Let's say if you was taking buys on GJ, let's say for example you were looking prices ranging. Let's say this is a the New York session, excuse me, and prices breaking and closing above this range, and then he's taking a buy. That would make absolute perfect sense, because why? You have monthly in your favor being bullish, you have the weekly in your favor being bullish, the last weekly candle closing bullish, you have the daily candle in your favor being bullish as well, and all time frames are lining up. So if price ranged and didn't retrace, and let's say didn't retrace on a daily or didn't form the resistance or whatever, if price is continuing bullish, then yes, that's another break above the previous weekly high. You know, that's another break above the previous daily high. So it will make perfect sense for that kind of setup. Just because let's say price formed the resistance doesn't mean sells are coming. You know, just because price forms support, it doesn't mean that's buys coming. You know, that could be just price forming. For example, price forming a resistance at this level, not because you're going to see a pullback, but maybe a new range, not for sells, a new range to form before the continuation to the upside. So we have 5 minutes left before we end the stream. And you're welcome, Ziad. You're welcome anytime. So I do apologize. I think there is a slight late in, you know, there's in replies. So I do apologize about this. Yeah, like this is how it's easy to identify ranges. You can clearly see how this is where you think, okay, so my analysis have been definitely good because price is still ranging within this range. Look at how these 30-minute candles are closing. I mean, it's just a range really, you know. Look how the 15-minute candle printing side by side. I would 100% encourage anybody to start doing their analysis and just do your own markups, even if it's just, doesn't have to be 2 targets. Just identify an area where you want to allow price to range before breaking out of the range, before breaking out of a certain consolidation zone. Have 1 target for buys, have 1 target for sells, and just note it down on a piece of paper, or just take a screenshot on your phone, just line it up, you know, on your MT5 or on your trading view, whatever. Just put a line, for example, for let's say for a weekly, let's say you have an idea overall, I'll be targeting this weekly resistance for a new weekly candle to retrace to form a top wick, knowing that a weekly resistance has been formed, knowing that these 2 weekly candles formed a rejection to the upside and failed to close above this weekly resistance. So this is how I'm going to have my targets based on the weekly, and then the overall target for where price could reach is to fill the previous weekly low, and then to the push we could potentially see this previous weekly resistance to be retested around 2017, or even the weekly support around 2003. This is how you can line up your analysis. Basically, that's the weekly. Then you go to the daily. If the daily ranged, now this is where it becomes a little bit messy. Identify that no trade zone and then have a reasonable targets. Do we have any other questions? I'm really liking how the charts has been, there's an increase in volume on messages and chats, so that's really good. So thank you guys, I appreciate that. Just a quick reminder, guys, just make sure to subscribe, give us a like, and just make sure to follow these channels. We do post them 3 days a week. We have analysis done on Sunday, Tuesday, Thursday, preparing for obviously for Monday, Wednesday and Friday. So much knowledge for this, Sir Salim. Thank you so much again. Yeah, you're welcome, Vince. You're welcome anytime. Any questions related to the chart, just please feel free to ask, because I'm here to help you guys. The whole reason why we started this analysis is so we can have more interaction with people, answer questions, because then we're more directed into helping people. We believe in having a good trader. To be able to have a good trader, you need to provide them with clear education, to give them that clarity on the analysis. I'm not just, for example, I'm not just making the analysis and then just posting it and be like, oh, whatever is going to happen is going to happen. I'm here answering questions and giving breakdown analysis, top down analysis from the monthly to the weekly to the daily. I'm really liking this concept of doing these live streams, because before, when I used to record these live analysis, breakdown analysis posted on the channel, I have so many ideas and so many things to point at, but it's really hard to mention it all on the video, because the target we've had is to keep the recordings within 5 to maximum 6 minutes. So it was difficult to give so much information. It was just to give the necessary information that a trader needs to know. Sometimes there was certain keys that I wanted to point out, but it was difficult to do it. So with these live streams, it allows me to speak freely and explain clearly, basically. Okay, so I'm gonna just add another 2 minutes. Any questions, please let us know now, otherwise we will be going offline shortly, just in 2 minutes. Okay, so I think it seems like we don't have any questions. So again, thank you everyone for tuning in today. So this live stream will be pre-recorded, so it'll be recorded. Just give it half an hour or so to process with YouTube. So if I hope to see you all on Tuesday night to prepare for the analysis on Wednesday. Take it easy at the start of the week, and if you do have any questions, just let us know. Thank you very much for joining us today. Thank you.